guys, Mike here. So, oh boy, what a day in the semiconductor market. I guess that's what we need to start calling it. Not the stock market, but the semiconductor market, right? And I say that jokingly, but let's be real. That's what you're seeing right now. I mean, just going crazy. So in this video, we're going to talk about, obviously, the data dump that happened, which caused yields to go, see you later, right? But then the markets are like, eh. And then we're going to talk about what Nvidia finally pulled off. I think it's got to be the only stock that's ever done this to Apple, but it finally accomplished it supposedly. But there is a disclaimer on that, which we'll talk about with this reweighting of this major ETF. And then we'll go through a few stocks. Don't forget, and these are some that we talked about, right? So I want you to know about this. But then tomorrow the market is closed, so we'll definitely set up for Thursday and Friday with much more detailed charts on the indexes and a lot of major stocks and stuff. Now, of course, the news that sent, again, yields skyrocketing down because not good news for the economy. It's good news for the stock market, supposedly, or at least the semiconductor market. And when you look, you can see these are the sales we were looking for. Of course, we're still spending, and we're spending, but it's just going sideways, right? That's what retail sales are doing. You can see at the bottom, this is 2024. That doesn't look good, does it? I mean, when you look to the left, you see 2023, right, and 2021 and 2022. Now, as a side note, for those who didn't see my Saturday's video a couple weeks ago, see that right there? See how high those bars are and everything? Major spending. In 2020, that's when they gave us the money, right? And then they released us to go spend it. And we spent like crazy. And in 2022 as well, of course. But, you know, and you can see inflation there, right? And you wonder, why did it go to 9%? That's why I went to 9%. This was that pipe illustration I was telling you about, where you got a pipe coming up. That's the water pressure, which is the money they gave us. And there's a cap on top. And all of a sudden they go forth and be free, my children, and spend. And that's what we did. And all of a sudden the water pressure quadrupled right here. And boom, it exploded. That will be inflation skyrocketing on top of the combination of what? Our supply chains were crap because China stayed shut down for another 2 years after this. So this is a great illustration when you look at 2021 and beginning of 2022 versus now and 2023. And then look at 2019. 2019, that is like normal stuff right there. You see it to the left, all the way to the left? That's normal. Okay, so I just want to point that out to you for those who missed that, if you were wondering. Now, you see the yields dumped like crazy. You would have thought the market would have been ripping and roaring. But it basically stayed flat. There wasn't really nothing going on, man. Even small caps, which were green, actually leading most of the day, you know, end up kind of selling off. And but the reason why the big boys were all down except for Nvidia. I mean, that's just the way it was. And then some other semiconductor stocks. And when you look, this is what I was talking about. So Nvidia, supposedly they have topped Apple now on XLK. So they're supposedly going to get, and I'll tell you why I'm saying supposedly, the 21% weighting now instead of that 4.5%, and Apple will get reduced down to 4.5%. So you're talking about $10 billion of Nvidia supposedly being bought up, $10 billion in Apple being sold. We're going to talk about that in just a second. But again, there is something to this which says that that ETF can overrule this supposedly and say, no, we're not going to do this or whatever. I don't think they would do that, but there is some kind of clause there that they could do it. But I've never heard anybody topping Apple over the last 10 to 15 years in the ETF before. Let me know if you have. So supposedly it'd be Microsoft and Nvidia will have those two top weightings. Apple go down to 4.5%. This would be for a quarter. Okay, I think they do this every quarter. So just for a quarter. And the reason why it's important when you look at it, honestly, is because when you look here, you can see this is going to be a 3-horse race, man. So you can see Microsoft get knocked out if it don't perform. Look how close they are right here. I mean, you can have one go up, two slightly go down, and they're going to jump each other. Now, how long this battle is going to take place, who knows? But it's not just, I don't think XOK. I'm still trying to find more of these ETFs that are, you know, weighted like this. Let me know if you found any. But again, none of the rest of them are near this. So this is a 3-horse race right now. And this one, and probably other ETFs as well. And I want you to look at this visual right here. This is Nvidia versus Microsoft and the NASDAQ 100. NASDAQ 100 is a dotted line. You can see, you'll be able to tell which one's Nvidia real quick here. Remember, they've done multiple stock splits. That's why you're seeing that price to the left like that. And I mean, Microsoft is not. Just look at that. That is insane and crazy. And again, I have ran out of descriptive words. I mean, crazy is on that I can honestly look at, because this is just like a euphoric thing where every day we go, look, it's setting an all-time high. Okay, cool. Keep going. All right, you know. Versus everything else. And with these three stocks, they just keep you know, piling the money in. But don't forget, I mean, and this is where the difficult part comes in, is, remember, like, for example, Vanguard, right, has so many ETFs, and they hire these money managers to manage, one or maybe two of them, or whatever it is. But Vanguard in general and hedge funds in general, things like that, they only have one pie, right? And in that pie, they say, hey, we got rules. We can only own 25% Nvidia in the whole thing because you only get too heavily weighted in one, right? Especially in large companies like that or hedge funds. And so remember, if somebody will say they're managing VU, I'm just making this up for an example, and then somebody else is managing VTI, which are two of the most popular ETFs for Vanguard, and this manager over here decides to sell Nvidia out of the VU. Well, now the guy who's managing VTI can pick it up, and the guy over here can't get it back until somebody else within the family sells it, because you can't have the X amount, right? And they'll keep reweighting this and changing the rules as things go. But same way with Apple. That's why you'll see, like, during the market crash, like, why is Apple holding up so well? One, because they're a cash king, but two, a lot of these managers within the funds, they're afraid to sell it, right? Because those are the best performers, and they're like, if I sell it and Jimmy picks it up, I can't get it back, right? Until somebody else sells this. And so it's like a merry-go-round, right? And so that's what's interesting to see what's happening with this. And I know people are like, man, how much can this keep going up? It's like, well, now when it comes to that reweighting, 10 billion is peanuts, really, in the broad scheme of things. And for Apple, you won't even really see an effect like that. I mean, I forgot the stat. It's either 10 billion a day or 10 billion average week, whatever they do that trade for Apple anyway. But it's like, now you have a stock which already is in euphoria. I mean, just does it need another reason to go up? Well, now it just got another reason, right? So you look at that and you're like, oh, okay, so now more buying, right? And so it's just one of those things why I'm pointing it out. And if you see, if they're doing this every quarter, right? And again, there's other ETFs that are doing this, we just don't know about. They're having to do this. Then again, it's a 3-horse race. And if Nvidia keeps going at the pace it's going, right? And then Apple and Microsoft, who normally aren't big movers. That's what I was saying. Those two big green candles on Apple, that was so out of character. We had to go at those 7 to see something like that. Then that's where it's like, can they keep up with Nvidia? That's the big question. I mean, you would think we'd get a pullback at some time, for sure, but we've seen this. Remember, we have lived through SPAC mania, SPAC. Remember, they were bringing all those public, and they were going from $1 to $150, right, with no revenues. We lived through penny stock mania as well, where penny stocks were just flying off right and left and all this crazy mess. And so we've lived through these types of things, and each one of those went on way longer than we ever thought they would. So we'll see how far Nvidia can go. But at least Nvidia is like a company that makes a lot of money, okay, unlike the rest of those companies. But that went on way longer than I ever thought it would have. Let me know in the comments if I'm alone on that one. But of course, you saw in the flows last week. What'd you see? Large caps, once again, billions of dollars flowing in. Small cap, mid cap, nope, no love there going on, right? What else are you seeing, which doesn't surprise me, is you're seeing the bonds, right? It had a good bond sell at 1 o'clock today, I believe it was. A 10-year and 30-year had good bond sales. A lot of people, as one of our members says, trying to lock in those rates and stuff. So that's a big one. TLT is very popular right now. And when you look at an Nvidia chart, let me know what your price target is, where you think it'll finally top out to round off and come down for some kind of small correction or whatever. I mean, I said 135 to 140, somewhere in there, but 140 was my top target. I've seen people say 160, but I'm just curious what you think. As it comes to charting this thing, at this point in time, when you're in this state, again, and I've pulled out many times before, and it looks like a cliff on this, usually you can draw trend lines in. You go, okay, it'll bounce here. You got your Fibonacci's you can use. But even the people I know who talk about this, they're like, their fibs are starting to get really extended at this point in time. Most of them have already put in new price targets above. If it goes there, maybe we come down, get like a 5th touch on this trend line right here. So we've had multiple already. Maybe that's what happens. I mean, 131, 130, somewhere in there seems to be decent built-out support at this point in time, which would coincide with that trend line. But let me know what you got, guys. Now, when it comes to the market, are we getting any warnings from, junk bonds and stuff? Not really. There's a very small divergence going on a smaller time frame. You kind of see it right there, where you're getting a lower high right there versus a higher high, but that's very, very small, okay? When you look at the big one, you don't see that. But again, SPY and Qs, I mean, they're going straight up and stuff. And what you're looking for is a much bigger divergence. And so, remember, the S&P hadn't been doing what the Qs have been doing. It's been going up, but not like crazy versus the Qs and stuff like that. But again, junk bonds are hanging in there. It hadn't broke down below that 76 level. There's nothing super major on this one. So, this is what we talked about when the Treasury and the Fed were stepping in. Remember, the Treasury is buying back bonds. The Fed has slowed by 50% their bond roll-offs to create what? Liquidity, to try to stabilize the bond market. And the bond market knows that, right? And so again, on the hourly, you go there, you can kind of see it and go, okay, yeah, I see a little divergence there. We'll see if that ends up being bigger and bigger and bigger. And that can go on for a little while. So we'll see if that ends up panning out to anything else. Now, when it comes to a few stocks we had talked about, we kind of got what we kind of figured was going to happen, right? Shop, what I talked about the other day, I said we come up 200, golden pocket area, that level right there, 168 to 70 is going to be tough. What I like to see is what? I move down to try to test this level right here, and that so far is exactly what we've gotten. We tested today, held in that area, and maybe we get a bounce up to this level right here, reject, and then come up. Something like that is what you really want to see for more of a structural move. I know I personally would. And again, when you saw like, what was it, 12 straight days in a row, I mean, you had to have something going on here. But, if it breaks that, look right here for kind of a last stand. That's a fair value gap on the daily. Could come down and grab liquidity around 62-ish right there. But if 61.51 breaks, then probably head back down towards that trend line. And of course, where we talked about the MACD, where's it at, right? It was sitting right there at that 0 level. And so that's where we got faked out 2 times in a row. You pull up the stochastic, you kind of see right here. That's a high, right? There's your low right there after a couple of them. But you see the stochastic started to roll over when you set that high. Came down, obviously when momentum came down. Came up and got right around that 50 mark and then rolled back over. Okay, and then you come up to where we got now. We got the high right here with stochastic going crazy up here. Rolled over. Been sitting down here in the dungeons for a long time. It's rolling up. Well, where is the stochastic rolled into? It's rolling into that 50. So this is where you're going to get a fake out or breakout. That's what you got to look for. You need 50 to 60 to kind of confirm this, but it could roll over. So just be prepared for that, okay? Now, last one here, you look at Celsius. Be careful with this one. Again, we talked about that trend line, maybe 55, 60, somewhere in there. There was that daily fair value gap, which you got mitigated. About a 7% day, which is actually a really good day for it. And then in the grand scheme of things, it's nothing when you look at this chart. But, again, that's where you want to look at. But again, keep this in mind down here around 53 to 55. All right, there is a daily fair value gap if you want to reach for more liquidity down there. But when we look at it, you can look at the times it's bounced before. And it's not like it goes straight up. Again, there's always the first or whatever. But it'll go up, kind of come down with the red day because it's a big mover, right? A lot of day traders like to trade this one for sure. A lot of people are getting back into it, selling puts right now. Some people buying calls. All that good stuff, okay? Because it's actually a good risk reward when people look at this. But when we pull up the RSI, some momentum indicators, you can clearly see what happens on this one. When it bounces normally, and you can see on the daily, it hadn't got above that moving average on the RSI, hadn't got above the 50 or anything. You see the stochastics down there in the dungeon right now. You want to get this at least above 20 to start moving. Above 50 is even better, as you can see. But when you really get your moves, I mean the real moves, it's when that stochastic gets above that 50. Actually, it gets up in there in what I call the clouds, right? Above 75, somewhere in there. And that RSI gets above 50 and breaks above that moving average. Those two combinations, if it happens together, that's when you really get your really big moves happening in Celsius, okay, and a lot of these high flyers like that. So it's a combination you try to look for. But again, a lot of people like to catch the bottom because you get more out of it. That's very true. But just understand, where we're at. We're right at that moving average, which is a good thing when you see it. But you can see the last 2 moves up, right? You get a couple maybe green days, a red day, and then break above. But really just watch your momentum indicators on this one because that's what's going to tell you where Celsius is going, plain Jane. And always hesitate when you talk about momentum, because that's what those kind of stocks are, Shopify momentum. In a time like this where you see Qs going crazy, semis are going crazy, breadth, which we'll talk about even more, it sucks. But as I'll show you in tomorrow's video, it might be fixing to get a lot better. And I'm going to show you why on that as well. And I mean, because right now, I'll show you some of this tomorrow, but I think some crazy stat of like 25% of the days that the S&P has actually been open for buying, it has set all-time new highs, like 1/4 already through half this year. I mean, just nuts when you see that kind of stuff. But I'll show all you that tomorrow, all that stuff tomorrow and stuff, and we'll go over all that, especially earnings, things like that, and get set up. But hey, go enjoy your day off tomorrow from the market and everything, and all that good stuff. And I also bring some more stuff, so stats coming up, because we got to get prepared for the rest of June and July. So I'll bring you some really interesting stats on that right there, and not just some graphic, but I'll actually look in the charts for you and confirm it and show you about July and stuff, which makes sense. Kind of goes back into a video I'm going to actually show you in July that I made a members video about when it comes to July, August, September and stuff. So anyway, hope you guys got something out of it. Please hit the like and subscribe button on your way out. Appreciate it, guys, and I'll see you tomorrow.